Welcome back, ladies and gentlemen. I am Racky Ryan. Today I am going to be discussing Adobe stock. I recently have been adding Adobe stock to my portfolio. The reason why I'm adding Adobe stock to my portfolio is because I think the stock is undervalued. I'm going to be running a discounted cash flow model on the stock, so stick around because you're going to want to see what my model values Adobe at. Also, the majority of you are not subscribed, so make sure to do so because I'm over here doing all this research for free for you. So if you're not aware of what Adobe is, it is a software company that is in a lot of different industries, but it is mostly used for photo editing, video editing, etc. At the same time, Adobe also owns PDF and a bunch of other products within its ecosystem. There are other companies that are trying to compete with Adobe, but at the end of the day, Adobe is absolutely the best. And so Adobe is the leader in its industry and it has a wide moat. A moat is what we call in the investing world a large competitive advantage. Think about in the olden days when there used to be a castle and there was a moat around the castle. It made it difficult to enter the castle. So, in terms of investing, it is difficult to compete and enter the industry that Adobe is in. Adobe provides the best software. Photoshop, Adobe Premiere, After Effects, Lightroom, you name it, Adobe does it. So beyond the fact that Adobe is the best in its industry, another reason why I'm bullish on Adobe is because the company has changed its business model. Back in the old days, you used to buy software and you would pay one time and you could use the software as much as you want. But now, you have to pay Adobe monthly in order to use its product.
Once upon a time, when you paid for software, you owned a perpetual license to use it before the dark times, before software as a service.
So there's a couple ways to look at this. This has allowed Adobe to grow its revenues by a lot. On the flip side, some customers don't like this because they have to continually pay month after month after month in order to use the software. But at the same time, there also is a lot of users who enjoy this because after a month, if they don't like the product, they can cancel. But at the end of the day, as an investor, this has allowed Adobe to significantly increase its revenues. And also, like I said, there's not much other competition, so these users are going to pay for it anyways.
So I challenged my team to find out, by editing the production you're watching right now, if we can make videos without touching a single pay forever app. So that means no Adobe, and what that would be like. So have we freed ourselves then from the clutches of Adobe? No, we're actually going to crawl straight back to them, and here's why. First up, the size of their app library is unparalleled. Whether you're creating videos with effects, audio, image, documents, web pages, there's an app for that.
So now I'm going to dive into the DCF model to show you the price targets that I came up with Adobe. Alright, so I pulled up my discounted cash flow model here. We're going to run this model to value the stock of Adobe. So the way that my model works is you go and take the year 2020 free cash flow per share, which was 10.09. You go back 5 years on the free cash flow per share, which was 2.48. This is going to calculate a compound annual growth rate. If you're not necessarily sure what a compound annual growth rate is, I have a video that you can watch that explains that in detail. So now I'm going to go ahead and use the same future growth rate that has happened in the past. I'm going to use a 9% discount rate, which is about the average return on the S&P 500 annualized. The reason why you use a discount rate is because you have to compare the stock investment against something such as a benchmark like the market. Next, I'm going to incorporate a GDP growth rate. The reason why you use a growth rate is because you have to assume that the US economy is going to continue at a certain rate. That rate I'm going to use is 3%, which is the average GDP growth rate for the United States over the past 100 years. So this is going to give an intrinsic value of $519 per share. Adobe is currently trading at $444 per share. So we're going to enter $444 per share. And this is going to give 16.9% immediate upside. So according to my model, the stock should be worth $519 per share under these assumptions. Also, anything said in this video is my opinion. I am not a financial advisor. If you want to talk to a financial advisor, I advise that you go ahead and do that. So we're going to run 2 more scenarios, and these numbers do not change for the free cash flow per share, so I'm going to go ahead and enter those now. So now if you're bullish on the company, you could raise the future growth rate. So let's say that we think that the company is going to grow free cash flow per share at a higher rate than it has in the past. So let's just go slightly higher than it has in the past at something like 33%. The discount rate is going to stay the same. GDP growth rate is going to stay the same. So that is going to give an intrinsic value of $530 per share. It's currently trading at $444 per share. So that is 19.47 immediate upside. So in theory, according to my model, this stock is 20% undervalued. So for the last scenario, I'm going to go ahead and run a little bit of a bearish case. So let's say Adobe doesn't continue to grow free cash flow per share as quickly as it has in the past. So let's go with something like 30%. The discount rate is going to stay the same. GDP growth rate is going to stay the same. It is currently trading at $444 per share. So under these assumptions that the stock grows at a rate lower than it has in the past, it is still undervalued compared to its current market price of $444 per share. So I am extremely bullish on Adobe, and the price target that I'm going to be giving Adobe is $530 per share. So if you enjoyed this video today, make sure to hit the like button as well as subscribe. You can even turn on those notifications so that you can be the first to know whenever I find undervalued stocks for you.